we are kicking things off with big news in the tech world. Analysts at Mizuho have just significantly raised the price target for ARM, pushing it up to $255 from $230, signaling a potential upside of nearly 15% for investors. We'll dive into what this means for the semiconductor giant and the broader market.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Next up, we look at the stock's immediate reaction to these positive signals. ARM shares gapped up on Wednesday after that major price target adjustment from Mizuho, opening higher than expected, showing investor enthusiasm is already taking hold. But the story doesn't end there. We also have major insider activity to watch. CFO Jason Child sold a significant number of shares, and CEO Rene A. Haas also made some sales, giving us a look at what the company's leadership is doing with their holdings. And finally, we shift gears completely to a natural disaster story. Scientists are using incredible technology to recreate the devastating Tracy Arm mega-tsunami, revealing critical lessons about climate change and risk management in Alaska. Stay with us to understand the science behind this colossal event and the warnings it sends for the future. ARM Holdings, NASDAQ ARM, has seen recent activity in analyst rating adjustments and stock performance, supported by solid recent earnings. Mizuho analysts have raised their price target for the stock from $230 to $255, maintaining an outperform rating, suggesting a potential upside of 14.97% from current levels. The analyst landscape for ARM remains varied. UBS Group recently cut its price target from $175 to $170 while maintaining a buy rating. Morgan Stanley reissued an equal weight rating with a $150 target price, up from $135. Conversely, Citigroup downgraded the stock from buy to hold, and Bank of America maintained a neutral rating with a $120 target. Raymond James Financial upgraded the rating to outperform and set a $166 target. Overall, 18 equities research analysts currently rate ARM with a buy, 6 with a hold, and 1 with a sell. The consensus target price across these analysts stands at $177.75, with an average rating of moderate buy. In trading, shares of NASDAQ ARM climbed $12.96 during midday trading on Wednesday, reaching $221.80 on a volume of 4,679,107 shares. The company holds a significant market capitalization of $234.34 billion, with a P/E ratio of 296.38. The stock has traded within a one-year range of $100.02 to $237.68. Financially, ARM reported quarterly earnings on February 5th, posting an earnings per share EPS of 43 cents, surpassing the consensus estimate of 41 cents. Revenue reached $1.24 billion, a 26.3% year-over-year increase, alongside a strong return on equity of 14.01% and a net margin of 17.15%. Analysts project an EPS of 85 cents for the current year. Insider activity on Wednesday, March 25th, showed selling activity, with CFO Jason Child selling 21,280 shares and CEO Rene A. Haas selling 23,867 shares. Over the last 90 days, insiders have sold 83,712 shares worth $13.61 million. Institutional investor interest remains present, with 7.53% of the stock currently owned by institutional investors, following recent purchases by firms like Gray Fox Wealth, Advisors LLC, and Syntax Research, Inc. ARM is a global semiconductor intellectual property IP company specializing in designing energy-efficient processor architectures, including CPU cores like Cortex and Neoverse, GPU IP, and neural processing units. The company operates primarily through a licensing and royalty business model, providing foundational technology to chipmakers globally. Arm Holdings plc sponsored ADR, trading on Nasdaq under the ticker ARM, experienced a significant upward price movement following an analyst upgrade from Mizuho. Mizuho raised its price target for the stock from $230 to $255, contributing to a gap up in the share price prior to Wednesday's trading session. ARM shares had previously closed at $208.84, but opened at $232, with the stock last trading at $224.572 on a volume of 4,023,175 shares. Multiple other brokerages have recently issued positive reports on ARM. Guggenheim increased its price target from $201 to $240 and assigned a buy rating on March 25th. Deutsche Bank Aktiengesellschaft adjusted its price objective from $125 to $140 and maintained a hold rating on the same date. Rosenblatt Securities reiterated a buy rating and set a $175 price target. New Street Research upgraded its rating from neutral to buy on February 5th. Raymond James Financial upgraded the rating from market perform to outperform with a $166 price target on March 25th. Overall analyst sentiment remains positive, with 18 equities research analysts rating the stock as a buy, 6 as a hold, and 1 issuing a sell rating. Data from channel YouTube indicates a consensus rating of moderate buy, with an average price target of $177.75. In corporate news, CFO Jason Child sold 21,280 shares of the company on April 22nd at an average price of $180, marking a 12.18% decrease in his position. Separately, CEO Renee A. Haas sold 9,299 shares on April 14th, resulting in a 3.29% decrease in his holdings. Insiders have sold 83,712 shares, worth $13,614,730 over the last 90 days. Large investors have also made notable moves, including Steelpeak Wealth LLC acquiring a new position valued at approximately $320,000 in the first quarter, and D.A. Davidson & Co. increasing its holdings by 527.9% in the first quarter. Institutional investors and hedge funds collectively own 7.53% of the company's stock. Financially, ARM reported earnings results on February 5th, posting 43 cents earnings per share, slightly beating consensus estimates of 41 cents. Quarterly revenue reached $1.24 billion, up 26.3% year-over-year, with a net margin of 17.15% and a return on equity of 14.01%. ARM is positioned as a global semiconductor IP company, specializing in designing energy-efficient processor architectures and related technologies, such as CPU core families, Cortex, Neoverse, GPU IP Mali, and neural processing units, Ethos. The company operates primarily through a licensing and royalty business model rather than chip manufacturing. The company currently holds a market capitalization of $233.02 billion, with a price-to-earnings ratio of 296.38 and a beta of 3.4. Scientists are piecing together the complex mechanics behind the massive tsunami that struck the Tracy Arm fjord in Alaska last August, a wave considered the world's second tallest on record. The disaster occurred when an entire mountainside, over 3,200 feet tall, detached from the South Sawyer Glacier, plunging into the ocean and generating a colossal wave that surged over 1,500 feet up the opposing fjord wall. The event caused widespread destruction, stripping forests and hurling boulders, and generated seismic vibrations strong enough to shake the planet for days. In the aftermath, a team of scientists from the U.S., Canada, and Europe conducted detective work, publishing findings in the journal Science. They concluded that the event is intrinsically linked to climate change, specifically the destabilization of mountains caused by retreating glaciers, which undermines centuries-old land stability. Experts warn that these types of events are likely to increase in high-latitude environments like the Arctic and subarctic regions. The sheer scale of the event challenges human comprehension. To help the public grasp the magnitude, researchers utilized immersive technology, recreating the tsunami in a video game from the perspective of a jet ski rider attempting to outrun the wave. This approach aims to provide tangible public education, raising awareness for local communities and tourists. While the Tracy Arm tsunami resulted in no fatalities, experts note that the deadliest tsunamis often involve smaller waves, highlighting that wave height does not always correlate with casualties. Landslide-induced tsunamis are characterized by a rapid, powerful splash from tons of rock entering deep water, occurring in mere minutes. In contrast, earthquake-caused tsunamis can have longer durations and greater inland flooding potential. Scientists are deeply concerned by the apparent increase in catastrophic landslides across Alaska, with experts noting a tenfold rise in such events over the last decade. A major challenge remains the lack of predictive understanding. Despite extensive monitoring of some slopes, the federal government and state agencies are struggling to track these hazards effectively. To mitigate future risks, experts emphasize the need for enhanced monitoring, increased research funding, and greater public awareness. They stress that the responsibility lies not only with policymakers and industries like cruise lines, but also with individual citizens to understand the inherent dangers of visiting rugged wilderness areas near receding glaciers. Measures such as suspending routes into the Tracy Arm Fjord have been implemented by major cruise lines as a precautionary measure, signaling a critical shift in how these high-risk environments are managed. Alvarez & Marsal has expanded its strategic advisory capabilities by onboarding a key executive from FTI Consulting. The global professional services firm, which recently established a reputation advisory practice, has hired the second managing director from FTI. This move signals a continued commitment by Alvarez & Marsal to bolstering its expertise in high-level strategic consulting and reputation management. The addition of the FTI director is expected to enhance the firm's service offerings in the competitive advisory landscape.